It is going to start getting fun this week, folks. We have a lot of companies reporting earnings, including Tesla, Microsoft. We have companies like MasterCard and Visa and a bunch of other ones that we're going to talk about in this video. And of course, in this video, we're also going to break down the markets, talk a little bit about what I'm doing in the market. So sit back, relax, take a sip of your coffee. Of course, hit that like button and feel free to subscribe as well if you guys want to. And with that being said, let's dive into the video. And oh, by the way, if you want some free money from Moomoo and from Webull, and if you want 50% off of Seeking Alpha Premium, all those links are down below, guys. And with that being said, let's dive into the video. So you guys know on Friday we had a crazy freaking day. The Russell went up 1.7%. The NASDAQ, for Pete's sake, went up almost 3%, as we had the S&P up almost 2% and the Dow up 1%. And if you guys don't recall, the VIX ended up going back under 20 points. It closed under 20. It went down over 3% on Friday. And with that being said, even though we had a great day for the markets, as you guys probably remember, we're still fighting this trend line right here on SPY on the 4-hour chart. You guys can see it clearly. We're at a big resistance, a potential lower high at this point, which we're going to test this upcoming week for sure. And I mean, with all these companies reporting earnings, you bet your you know what, we're going to get some volatility, some price action, and we're probably going to get direction picked here. And by that, I mean, we're probably either going to break out of this trend line, maybe start taking out 400, 405, 410, which obviously would be great for the bulls, or we're going to get rejected and, maybe start dumping back under 390 into the 380s, maybe even lower than that. So we're at a very pivotal spot on SPY and on Triple Q, which you guys know tracks the NASDAQ. I mean, you guys can see here, clearly we're at a lower high. If I zoom in a bit, you will be able to see it. I mean, you can see it either way. And, if we break 285 this week on Triple Q, we start running 290, 295, that'd be great for the bulls, especially if this somehow breaks over 300. And, of course, that has a lot to do with earnings coming up. We have big tech starting to report not only this week, but the week after that and the week after that. So, yeah, I mean, with these earnings coming out, we are going to get fluctuations in these ETFs, especially Triple Q, which is a heavy It's a tech ETF, guys. I mean, the big tech names make up a ton of this ETF. I can't tell you off the top of my head, but it's got to be 40%. I mean, we're talking a lot, maybe even more than that. And I'm talking about, Apple, Google, Meta, Amazon, companies like that. Microsoft, they make a lot of this ETF. So expect it to move based on those companies moving, because they have a huge weighting overall in the U.S. stock market. So Triple Q breaks 285. We could start seeing that run towards 300, maybe even above 300. But if it fails here at 285, guys, breaks back under 280, it could start selling off even more, especially if we get under these moving averages, which the 180 moving average here on the 4-hour chart is at about $273. So what do you guys think? If you were to guess, if you were to place a bet, if you were to buy, let's say, calls or, options, let's say, for a month out, are you buying call options right now a month out, or are you buying put options? And let's be a little bit more specific than that. Would you buy, or let's just say this, do you think Triple Q is going to break out of 285, start running towards 300 by the end of this month, heading into February, or is it going to be the opposite? What do you guys think? And do you think SPY, same thing, is it going to break out or start to sell off again? Let me know your thoughts in the comments. I'd love to know what you guys have to think, as always. So with that being said, let's pull up oil and see where that's at heading into this week, how the chart is looking like. So you guys probably know oil ended up breaking back over $80 a barrel last week, and actually $81, and it's almost at $82. Look at that. And $82, you guys probably know if you've been watching the channel, 82 to about $83. That's been resistance for a good couple months, since the middle of November. And you guys can see we've been trading in this channel from the middle of November. And by this channel, I mean from $70 to about $80, $82. So if crude oil could take out $82, $83, I'll set my alert there right now. Let me do that. Mark is at or above. This could really start to break out even more, right? We can see here, if we pull the chart up, well, it's already pulled up, we can see the next gap to fill could be towards $90, $93 a barrel here. And, at that point, we could start seriously seeing a reversal, maybe towards 100 again. I don't want to get too, far ahead of myself here, but there's a lot of fundamental things going on. Maybe we'll make a video on it moving forward. One of these days coming up. I've already talked about it, but, with oil prices potentially going higher here, this could end up running to the 90s very quickly, on a technical basis. I mean, just looking at this chart, if we break 83, we really have a wide open gap to the 90-93 level, at least in my opinion. What do you guys think? Let me know your thoughts in the comments down below. So with that being said, let's talk about companies that are reporting earnings this week. And let me tell you guys, it is jam-packed. I mean, we're not going to break down all of these companies in this video, but let me just list down by day here who's reporting. So on Tuesday, we have Microsoft, we have Verizon, we have Johnson & Johnson, we have Lockheed Martin, we have Halliburton, we have General Electric, and we have 3M, to name a couple. There's more, but that's on Tuesday, the big names. And then on Wednesday, we have Boeing, AT&T, we have Tesla, IBM, Las Vegas Sands, to name a couple. That's on Wednesday. And then on Thursday, we have American Airlines, we have LUV, what the heck is that? Mind fart. Southwest, brain fart, whatever. Southwest on Thursday. We also have MasterCard, Visa, JetBlue, and Intel. Then on Friday, it's slowing down a little bit, but still some big names. Colgate, Palmolive, Chevron, American Express, to name a few, and I think there's a couple other ones, but there's a bunch of companies, ton of companies reporting earnings this week, and out of those 20 that we just named, we're going to break down 10 more in particular in this, more in depth. We're going to look at the charts. We're going to talk about EPS and revenue estimates, things like that. So, yeah, let's just do that right now. And if you guys are finding value, of course, hit that like button. Let's try and get at least 100 likes. I can't even remember, to be honest, the last time we've gotten 100 likes on a video, which that could change right now. If you guys haven't hit that like button, hit that like button, and let's dive into this. So, Microsoft is the first big tech name to kick off earnings, which is very important. I want to see, and I'm very excited to see how these numbers end up coming in. So we have Microsoft on the 24th after the bell, which is on Tuesday, like I said, after the bell. They're looking to do EPS of $2.30 on revenue of $52.96 billion. And these are all estimates, guys. Keep that in mind. All estimates. And the revenue for Microsoft is looking to be up, projected 2.4%. Which really isn't nothing. With all the inflation we're seeing, that's pretty much flat negative revenue growth. I mean, so yeah, Microsoft, don't expect anything crazy on the revenue front. They're still obviously very profitable. They're a very strong company. No one's denying that. But they're not going to be growing year over year on revenue. Like a lot of these companies that we've seen, especially the big tech names, a lot of them are not going to be growing. Some will be declining year over year, guys. Keep that in mind. And when we're looking at the chart, it's like SPY. It's like triple Q. It's at a point where it's still at a lower high. It's still in a downtrend. We're fighting the trend line right now. And if we're able to see a break on Microsoft, let's say after these earnings, past maybe 245, 250, right around these points, I'll draw the trend line right now. You'll see it. If we start getting out of here, 250, this could really start to reverse. And we're not there yet, but who knows? Maybe earnings will surprise us, guys. These are going to be very important earnings to watch out for. So in the meantime, I'm going to put my alert at 250. Mark is at or above. And the thing with a lot of these companies, guys, is, yes, they're laying off people like we've seen, Microsoft, Amazon, Google. But what they're doing is they're essentially trimming off the fat in areas of the business where, let's say, the area, the segment's not growing as much as it was. These businesses, you see Microsoft and you're like, you'd think, well, not many people think this, but, oh, they only do one thing, right? Oh, they just sell software. But no, I mean, Microsoft, Google, Apple, these companies have so many businesses within the business. The segments within the business, there's so much. And they have obviously so many employees. So, they're going to be potentially laying off more people. Same with all these other companies. Has Apple? I don't think Apple has laid off yet. I could be wrong on that, but I'm pretty sure they haven't. So we're going to start seeing that, and all they're doing is trimming the fat off segments that are not growing, because there's so many segments within the business that, let's say Amazon, AWS needs more employees. We're going to trim here and then hire more in AWS, right? So that's kind of what we're going to be seeing here moving forward for sure as we're getting into this recession, whether it gets to a level where the recession is awful, or maybe we have a mild recession. I don't know, but we're going to be seeing more layoffs, in my opinion, in these big companies. Which you guys saw on Friday, Google announced they're laying off however many people, I forget at this point, 12,000, right? Yeah, 12,000, and their stock went up a ton. So, I mean, it went up 6%. It's almost at $100 again. And watch Google, guys, at 100, 102. That's a big spot for Google. So, yeah, these layoffs, the stock market likes it. That's just the reality. I think that is a big reason as to why the markets ran on Friday. And on top of that, of course, Netflix, which kicked off the earnings, they did pretty well on, global paid subscriber growth, additions for the quarter. That kind of kicked things off and, sparked the rally in the market. So what do you guys think about Microsoft? Do you own it? The next one is Verizon, ticker symbol VZ. Let's pull it up. You guys can see Verizon has been breaking out for sure. We ran all the way to $42 about a week or two ago. Then we pulled back to about $39.40. We held that, which is good considering $39.40. That was resistance back in November. We held it. We bounced. Now we're starting to break back out. So this is one that I'm looking at kind of as a continuation play. Maybe it starts going back to 42, maybe 42.50. Maybe we start breaking out of there. So they're on Tuesday, like I said, and EPS is looking to be $1.19 on revenue of $35.14 billion, which would be up roughly 3% year over year. So not too bad there for Verizon, but pretty much just flat revenue like we saw with Microsoft. And there on Tuesday in the morning, I believe. Let me see here. Yeah, in the morning, watch out for Verizon. Another one is Johnson & Johnson, which has just been destroyed the past couple of weeks. I mean, destroyed. It's not that bad. It's only down 7% in the past 3 weeks, but still, that's a decent chunk there for a company like J&J. And they're going into earnings on Tuesday, looking to do EPS of over $2.20, roughly $2.23, on revenue of $23.95 billion, which would be down 3.4% year over year. So expect declining revenue growth for J&J. But the thing is, guys, this, like I said, it's down 7% heading into earnings. Pretty oversold, very oversold. I mean, look at the RSI here. You can see it. It's at 29.30 right now. This might, who knows, see a bit of a snapback if earnings aren't as bad as expected. Maybe guidance is decent. So don't be surprised if we do get a little bit of a snapback, because I don't think this thing has had a green day in 3 weeks. Maybe one or two in here somewhere, but it's just been straight slaughter for Johnson & Johnson. So maybe we do get that relief rally one of these days. Lockheed Martin is another one that I'm looking at. This one's down from 500 now to 440. In other words, it is down 12%, putting it a little bit past correction territory. And if you guys look, I mean, you could argue it is still holding an uptrend. I mean, don't you guys see that? We got boom, higher low, and higher low. You guys see that, right? So earnings are coming up on Tuesday after the bell, or actually, no, they're probably pre-market. They're pre-market on Tuesday. They're looking to do $7.39 in EPS on revenue of $18.27 billion, up 3% year over year. So essentially, guys, Microsoft, Verizon, J&J, Lockheed Martin, they're not doing much of anything on revenue growth year over year. Pretty much nothing, right? It's flat, declining in some cases, and with inflation, that's making the numbers even worse, right? So Lockheed's pretty oversold as well, kind of like J&J heading into these earnings. So let's see, maybe the trend continues. Maybe we do get a little pop here into the 450, 60 range. Maybe. We'll see. Who knows? Am I crazy, guys? Let me know your thoughts in the comments. So LMT, watch out for it. Let's see. What's the next one here that is on the list? Come on. There we go. Let's see. Coming down a little bit, we have Boeing on Wednesday, ticker symbol BA. Let's pull that up. They're looking to do, let's see here, 25 cents in EPS on revenue of a little bit over $20 billion, which would be up, get ready for this, 35% year over year. Pretty solid revenue growth expected this for this quarter on Boeing, looking at the year over year number. And you guys know I've been talking about the stock. This thing has been crushing it. It went from 113 back in June. Now we just hit over 200, and we have been pulling back a little bit these past couple of days. And that might continue, but overall the trend is clear as day. It's uptrending. We're above the main 180 moving average, right? On the 4 hour, we're holding the trend line. So this heading into earnings, maybe it continues. And if we pull up the 3-year chart, we can see and zoom in a little bit, 225 That's a big resistance from back in 2021. You can see it here. So if we start breaking past 225, 250, 275, this thing could really start to move. And of course, that's not going to happen in a week or two. At least I don't think it will. Who knows? Anything could happen. But more realistically, this is something I'm watching out for, over the next couple months. If it even does happen, of course. We don't know what's going to happen. So Boeing looks pretty good. Of course, it's been doing well. But if we do keep going here past 225, this could really continue, in my opinion. So we also have none other than Tesla this week, guys, which we have talked about a lot recently. You guys know that, especially in December when Tesla got destroyed from $200 all the way down to $100 pretty much, lost 50% of its value. I made a Tesla video pretty much every day in December, and I still talk about it a lot here, and we're going to talk about it even more right now because the company, and by the way, guys, I'm not a Tesla shill. I'm not somebody that has a ton of money in Tesla or all my money in Tesla or a vast majority. It's not the case at all. I'm just here breaking down the charts, being very objective as I can, and really, I'm somebody that's not scared to call out Elon Musk's BS or just tell it how it is, and that's how you guys probably, you guys have probably seen that. This is not anything new. I'm not one of these guys that is just, oh my God, Tesla this, Tesla that, moon, we're going to the $10 trillion market cap. That's not who that's not what what I'm about here. But we're still going to break it down because it's just fun to talk about, let's be honest. And at this point, Tesla is at a very vulnerable spot. Very vulnerable spot. I mean, this is the opposite of what we've seen with companies like J&J. Remember, like I said, J&J, Lockheed Martin, those two, even though these companies are not correlated, but those two have sold off heavily heading into earnings. On the flip side, Tesla heading into earnings, which are probably not even going to be good, although that could be priced in. I don't know. But Tesla heading into earnings, guys, this thing is up a ton. It was $101 on the 6th of this month. Now it's at $133. That is a 30% move heading into earnings. If they drop the ball on earnings, guidance maybe is off, Elon says something, who knows, this could easily start to sell off even more. And you guys can see clearly we're still on a downtrend here on the 4-hour chart. And look, time and time again over the past couple months, when we've seen Tesla see these relief rallies, it's gotten rejected at the 180 SMA, and that's where we're testing right now. So for me, it's a little bit risky here. If you buy here, banking on it, breaking out and doing well after earnings, that's a big risk. That is a big risk. But in my opinion, if you wait until after earnings, maybe earnings are better than expected, maybe we then start breaking out of these moving averages, start running, that'd be a different story. But for me, I don't like trading, gambling on earnings. And I've said that before on the channel for years at this point. And I'm sure as heck not going to do it on Tesla heading into a quarter where earnings are probably not going to be good. We're 30% up heading into the earnings report in a downtrend. We're pretty overbought on the RSI. It's just not the best setup. So, of course, we're watching Tesla. We're going to cover it all week, no doubt about it, but we're going to keep it real. And for me, right now, I'm staying away from it in the short term, but we'll see. We'll see how earnings look as they are looking to do 1.13 in EPS on revenue of $24.16 billion, which would be up 36%. So they're going to grow nicely year over year, but it doesn't matter. I mean, the market knows that, and the stock has still gone down a ton, as you guys can clearly see. So after Tesla here, we have Las Vegas Sands, which is on the same day as Tesla on Wednesday. Let's bring this up, and this stock has just been, oh my goodness, it's just been doing so well. Look at this thing. It was at $34 back in October. Now it just hit $54. It closed at $54 on Friday, and they're looking to do EPS of, let's see here, -9 cents. Oh wow, so they're going to lose money on the quarter. It looks like they lost money last quarter and the one before that, and I'm pretty sure they were profitable, very profitable at one point, or maybe not. Oh my God, it looks like here on the 3-year chart. Well, that's after COVID. COVID at this point is pretty much 3 years ago. So the 3-year chart shows that they haven't been profitable in 3 years, it looks like, on any of these quarters, but that's after COVID. So probably before COVID, I'm assuming that they were profitable for the most part. And who knows when they're going to get back to profitability, but -9 cents on the quarter. They're inching their way back there. Last quarter they did -25 cents, if I saw it correctly. Let me see here. -27 cents. Before that, -34 cents. Negative 9 cents right now. All right, not too bad. On revenue of $1.18 billion, which would be up 17.5% year over year. So I'm watching Las Vegas Sands as kind of a continuation play. You know, if earnings come in pretty decent, sure, it might pull back a little bit. Who knows? Maybe some volatility. But if it could overall hold the trend, who knows? Maybe we could end up trading that. And then on Thursday, we have American Airlines. Let me pull that up. AAL is the ticker. We can see here they are on Thursday in the morning. Let me see. Yeah, airlines are in the morning. Yeah, that's in the morning on Thursday. They're looking to do EPS of 90 cents on revenue of $13.03 billion, which would be up 38% year over year. That is actually crazy. We can see here AAL has been breaking out. It's at a multi-month high at this point, well above the moving averages, and we're a little bit overbought. I mean, even though the RSI is kind of in the middle here, it's at about 49. I still think it's a little extended here. I wouldn't be surprised if it did come down a little bit more, but anywhere around 14.50 to about 15.50 on AAL is quite interesting, especially if earnings are pretty good. Maybe we sit around here $15 a little bit, maybe get that pop back towards $20, which you guys can see here. If I pull the 1-year chart, AAL, $20 is where it was back in, the beginning of last year, about a year ago. That's where this thing could be breaking to, and it kind of looks like it's starting to do that. So AAL, watch out for them. We also have MasterCard. Let's pull that up. MasterCard, if we look here on the 1-year chart, it's breaking out. It's at a multi-month high. It's above the highs from back in June rather. And now we fill the gap entirely to the high from the end of April, which you can see here is right around 380. And now if we break above 380 heading into this week, we could be making a shot to all-time highs. All-time highs on MasterCard, I think right around 400. Maybe that 399 level right here is the all-time high. No, it's not. 401's the all-time high. So I'm going to set my alert. I don't know why I didn't do this last week, but I'll do it right now. It doesn't matter. I'll set it at $380. Maybe 381. Let's do that. Mark is at or above 381. If we get out of that point, guys, we could be filling the gap to 400 depending on what these earnings are looking like on Thursday, where they're looking to do EPS of 258 on revenue of 5.79 billion, which would be up 11% year over year. Not too shabby. Then the next one that we have, the last one for the video, guys. And by the way, if you're still here, I appreciate you all as always. And if you haven't hit that like button yet, hit that like button. We're trying to get at least 100 likes on this video, which again, I can't remember the last time we've gotten 100 likes. And you guys know, the interest for stock market content has not, it's come down since, when was that? Of course, the bubble of 2020, 2021, when everybody was locked in. It's come down a good amount from that point, which is probably why we can't get 100 likes on the video. It's not your guys' fault. All you guys that are still watching the channel are, of course, avid stock market people. You like the stock market. You're not just, following it. You're, because of, the lockdown, you clearly, want to continue to follow it. But, just being real, we haven't gotten 100 likes, and it's because of the interest overall. A lot of these stock channels, a lot of the finance channels, which is a whole nother topic for a whole nother video. We're not going to get into that here, but they haven't really grown much, at least on YouTube, and, we've been growing a little bit on YouTube, but on other platforms, I'm on every platform. So, I've actually grown overall, I'd say, for sure. Because on TikTok, I almost have as many subscribers as here on YouTube, and then on Instagram, and then on Snapchat, and all that. But we're not going to get into that in this video. That is a whole different topic. But yeah, I appreciate you guys. All I'm trying to say is, for all of you that have stuck through the big bubble and the pop of the bubble, and you're still here, I appreciate you guys. And let me know, honestly, let me know in the comments, how long have you been watching the channel? I sincerely want to know. If you're still watching, how long have you been watching the channel? Has it been a couple months, couple weeks, couple days? Or has it been, because I started YouTube 5 years ago, has it been 5 years, 4 or 5 years? Let me know in the comments, guys. And with that being said, Visa, EPS is looking to come in at $2.01 on revenue of $7.7 billion, up 9.1% year over year. Not too bad. So Visa, MasterCard, they're looking to do pretty well, and it's, Visa's been running up for a good amount of weeks here, especially last week. On Friday, it had a 1.8% green day, very strong day on Friday, and we can see here on the 3-year chart, it's breaking out. It's heading towards, by the looks of it, the highs here from back in March of last year, about 230. If that were to break, maybe the highs from the end of January of last year hit 235. If that were to break, we could be going all-time highs. So Visa looks pretty good, guys, and MasterCard does as well, in my opinion. So with that being said, we're going to wrap it up here. If you enjoyed the video, hit that like button, make sure to subscribe, and don't forget to get up to 15 stocks from Moomoo, each up to $2,000, and you could also get up to 12 fractional shares from Webull with any amount deposited. All of those are linked down below, and don't forget to also get 50% off of your first year using Seeking Alpha Premium. Seeking Alpha is great. They've been around for a long time. Awesome platform. If you guys want to try it out for 1 year, 50% off, use that link down below or go to StockSurfest.com/Seeking Alpha. And with that being said, I appreciate you guys. As always, I'll catch you in the next video. Peace out.